from a long-term perspective, this is a major breakout. The trend is clearly up. However, over the shorter term, caution is a little bit warranted. Things don't go up at this trajectory forever.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 28th through November 4th, 2024, while supplies last. This week we feature gold half-ounce backdated Canadian maples at just $110 over melt. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny, the Silver Chartist. Steve, thank you so much for joining us today.
Hey Elijah, it's been too long. I'm really excited for this call. I haven't done an interview in, it's probably been 6-7 months. I think the last one I did was with you. So really excited to connect with you again and connect with your audience. I think we've got a lot of good things to talk about.
Definitely. Well, thank you so much for coming back on here. Our viewers always enjoy our conversations, and after such a run in the metals, we needed to have you back on. So can you give us your overview of what gold is doing right now? It seems like hitting new all-time highs every day, pretty much at 2,800 recently. Your perspective on this?
Sure. So I like to go big to small. So from a big picture perspective, we got the fundamental backdrop that's been in place for a long time now, where we're basically heading into a situation where the Federal Reserve is trapped. And they claim to have a dual mandate of price stability and strong labor market. Well, I think they can say that all day long, but really the problem now is unsustainable debt in the fiscal situation, where we're approaching a point where just the interest payments on the national debt will soon consume all of federal tax receipts. And we're approaching that point. And obviously the biggest variable in that equation of when we reach that point is the interest rate. So they've got to get interest rates down to get that interest expense under control to avoid that day of reckoning. Well, what's the side effects of that is debasement of the currency and persistent inflation. So I've been saying for a long time, I'm in the camp of persistent inflation over the next 10 years, but be prepared for sharp deflationary impulses. And this is obviously very bullish for gold. So that's the fundamental backdrop. Now, the technical backdrop is extremely bullish. We've been saying on your channel for a year or two now, when we break above 2089, that was the previous all-time high from back in 2020, that unlocks a measured move target of $2,500 to $3,000 gold. Kind of been saying that for a very long time. Well, sure enough, we broke above 2089, and then just last week we went up and tapped 2772, right in the middle of that measured move target. So from a long-term perspective, this is a major breakout. The trend is clearly up. However, over the shorter term, caution is a little bit warranted. Things don't go up at this trajectory forever. So I wouldn't chase here, but I'm very bullish on the long-term prospects for gold, and even more so for silver and platinum.
Now, potentially a short-term pullback is what you're looking for. Based on the chart pattern, what do you see are some of the levels we could retest?
Sure. And we'll just briefly go through this. And I always like to say, because I know many of your listeners and a lot of listeners out there are so familiar with the fundamentals for gold, and that is all totally valid. But these technicals really do matter, and it doesn't have to be complicated, because the big institutions, the trading algorithms that trade these paper markets use technicals. It's a big input. So I'm sharing with you right now the long-term chart for gold. These are monthly candlesticks, and you can see those vertical red lines. I'll put my cursor over them right here. And you can see the last 3 times the RSI got this overbought. So you see that red line at the very top. It's very rare that you get above that RSI. So the last couple times preceded pretty significant pullbacks, and it took quite a while to get back to those levels. Now, I think there's been a paradigm shift, not to use too dramatic of a term. So I don't think it's going to take a few years to get back to 2772 or this area. However, conditions are ripe for a pullback when you look at the longer term charts. And when you zero in, and so you say, hey, well, where might I look for a pullback? Well, let's go ahead and look at the daily chart here. And you see this 50-day moving average right here down on around 2,600. And I've labeled this for our members. Now, I'm not sure we're going to get back here. But if we do, that's where I plan to scale in aggressively. I think it's important for everyone to have if-then statements. So for me, if gold pulls back to this best buy zone that I've labeled here between 2285 and about 2400, then I'll scale in aggressively. That's a pretty good support zone. You've got the rising 200-day moving average there, pretty good area of support right between 2300 and 2400. And then the stink bid zone down around 2000. Not sure we're going to pull all the way back to 2000. That would be a pretty big pullback. I don't rule out that possibility. However, 2300 to 2400 would not be surprising at all. And I think that would present a very favorable risk reward opportunity to begin accumulating again.
Now, as for silver, we're in, more than highs we haven't seen for over 10 years. Your perspective on this, and do you also anticipate a pullback before we move higher?
I do, and we've already seen it. Like silver just moves so fast. So here's the long-term chart for silver, and this is no surprise to your listeners. Most everyone listening to this knows we've been to $50. We got there in 2011, 48, 42. We're back at $50 in 1980. And to my knowledge, silver is the only commodity on the planet that's trading way less than where it was 40-something years ago, back in 1980. So from a fundamental value proposition, silver, the risk-reward ratio is very favorable. However, it's very wild and volatile. So in full disclosure, we took profits right around this $35 level last week when we briefly poked our head above that. But when you look at the daily chart here, I put out a post for our members, and let me zoom in a little bit so you guys can see this more clearly. I posted this, I think it was Sunday evening. Anyway, we're right about here. I said, hey, where I would consider scaling back in is between 32 and 32.75. That's our first big support zone. Well, we're there right now. We're right in that zone. It coincides with the lower rail of this uptrend channel. Below there, you've got this blue 50-day, and then all the way down here, you've got the 200-day moving average. So those are potential entry points. But what's really important about this silver chart is this pattern. And this is a very obvious pattern. It's a reverse head and shoulders. So you got a left shoulder, a head, and a right shoulder here. And the way you get a price target or a measured move target is you just take this pattern and flip it on its pivot point. So if you use $33 as the pivot point or the neckline, that projects a measured move target up around $39. So that's my base case scenario. I don't like to make predictions, but I think the probabilities suggest more upside ahead in silver in the weeks and months ahead, up to about $39. And because silver is so volatile, I don't rule out the potential for an overshoot up towards in the 40s or even a test of 50 before a bigger pullback again.
So it seems like right now, silver might actually there might be more upside potential in the short term compared to gold.
Absolutely. From a percentage basis, yeah, silver certainly has more upside potential. But I like to look at, too, the upside potential measured against the downside risk. And then you get a risk-reward ratio. So the asymmetry in silver is much more favorable right now. In other words, downside risk is still minimal relative to the upside potential. We're in gold's still up at 2750 or so. I mean, gold could potentially pull back $300-400. That wouldn't surprise me at all. It also wouldn't surprise me if it rallied another $300 or $400. So rather than trying to predict which way it's going to go, I look at the ratio. It's about a 1-to-1 ratio, which that's kind of like a coin toss. I think we can do better than that. Where silver, yeah, it may pull back $2 or $3, but it's got, $10 to $15 of upside potential. So that risk reward ratio is more favorable in silver than gold, in my opinion.
When it comes to the other precious metals, platinum and palladium, they have not performed as well this year. Not even rising 10% for either of them, but gold and silver up 30 and 40% this year. So your perspective on that, do you see a catch-up for platinum and palladium coming?
I do, and especially platinum. I like palladium a lot. One way I trade it is the SPPP. It's the Sprott Physical Platinum and Palladium Trust. You get exposure to both in one ticker, physical metals. But I'm also a big proponent of just buying physical platinum. That's my favorite way to get exposure. And to me, platinum is very likely to outperform gold. And not only outperform gold, but I think it has the potential to outperform silver. I'm not predicting that, but platinum is just so undervalued. You can see on this long-term chart, platinum got up to $2,300, almost 15 years ago, 2008. And here we are down around 1,000. So platinum could double and still be below where it was, 15 years ago. And what's interesting about platinum is when you look at ratios, the platinum to gold ratio has never been more extreme. In other words, platinum has never been more cheap relative to gold going back decades and decades. I think it's like forever. This is a generational opportunity, in my opinion, in platinum. And anything around $1,000 platinum, I think, is a steal. For me, it's also higher risk. So I like 20% of my physical metal allocation to platinum. That's a number that works for me because, silver and gold have a 5,000-6,000 year track record. Like, I'm super confident in those doing what they always do. I think platinum is likely to participate, but it doesn't have as much of a guarantee. But very bullish on platinum. Before I ramble on too long, let me talk about this technical chart because this is a powerful chart. This triangle pattern has been in place here for 15 years. And look where we are. We're approaching the apex of this triangle pattern right now. These are monthly candlesticks. So if we can close the month above this resistance line, we tried to do it last month. You can see it right here, poked our head above it and came right back down. If we can close the month above that resistance line, we could see a really powerful move, a catch-up move in platinum. And I think that's likely. People are looking at $2,700, $2,800 gold saying, hey, I don't have almost $3,000 to go buy an ounce. Well, now I'm going to look at silver. Well, silver's up at 34, 35. Maybe I'm going to take a look at platinum too. So platinum could see a pretty rapid catch-up move.
No, I think it's important. You mentioned how you don't like to make predictions, but you kind of give a percentage probability of these moves happening. So can you discuss also in these times when we're seeing massive moves in the precious metals and your perspective on the approach that people might want to consider when it comes to these markets?
Yeah, I think it's so important to have a plan. And I've been doing this for over 15 years now. And I've learned many lessons the hard way, unfortunately. So hopefully I can pass along some of those lessons to newer people, or if you've been around for a while, and help people not have to make the same mistakes I've made. So I like to say, whenever you push the buy button, have a subsequent plan to push the sell button. Because if you look back and study like the 1970s bull market, very few people took profits when silver ran up to $50. So they sat on it and they experienced these life-changing gains, but they were unrealized gains because they never took any off the table. So my strategy, and you don't have to mirror mine, but I think that people should just have one. It's important to have a plan, an exit strategy. So for me, the physical metals, I plan to hold most of that as a generational insurance policy. Like, I'm not selling that. Maybe some because I have an overweight exposure when the time is right, but I'm going to have some as a generational insurance policy. But mining stocks, man, these things are so volatile and people are left bag holders because they don't have a plan to push the sell button. And you don't have to sell all at once. So my strategy is I scale out into strength when we get overbought against resistance, take a little bit off the table, and then inevitably when we pull back to support, I scale back in. Sounds very simple, easy to do. It's easier to said than done, but that's my strategy. And it's worked very well for me over the past couple of years and members at Silver Chartist.
And if our viewers are interested in learning more, they can go to silverchartist.com. But before we let you go, I did want to maybe dive into some of those mining stocks or maybe some of the indices. I know you follow SILJ quite a bit. As we've seen gold and silver run, what are the mining stocks doing right now?
Yeah, for sure. So, and this is typical in a precious metals bull market. What tends to happen, physical gold leads, then physical silver as a catch-up move. Then, it goes in the order of physical gold, then the big gold miners. So we saw that. Agnico Eagle, for example, up near all-time highs. Wheat and precious metals making new all-time highs, big ones like that. Newmont had a big run before this big pullback. Anyway, and then you see silver and silver miners play rapid catch-up at the end. So we haven't seen the big rapid catch-up move in silver and silver miners. So just like in the physical metals, I see the opportunity, and where I'm looking to accumulate on pullbacks, not right now, but on pullbacks to support is in the junior silver miners. And like you said, I prefer the ETFs. And this is another thing that's not popular to say because it's exciting to go talk about the next explorer and developer that could be the next 10, 20 bagger. But the truth is most of those stocks end up eventually bankrupt. And it's very hard, even if you do catch a big move, to time your buying, your entry and sell points. So I'm a big fan of just trading the indices. So I watch SILJ like a hawk. I mean, I watch that thing every day. I know the levels and we trade that. So you can see on the screen here, like first profit zone. These are charts I share with our members. We scaled in aggressively last year, about 1 year ago, down near 8. And you can see profit target number 1. I had this plan written out ahead of time so that when it came to fruition and I see price up here, we sold about 20-something% of our silver miners right up here. Now we're pulling back and looking for a place to scale back in. So I'm not sure if I answered your question, but I think there's still a lot of opportunity. in these mining stocks, especially silver miners right now, especially if you've got the right risk tolerance and time horizon. But the takeaway is have a plan to push the sell button, because you don't want to just hold these things indefinitely.
Fantastic. Well, Steve, we really appreciate your time today. As always, if our viewers are interested in learning more, they can go to silverchartist.com, I believe. Can you tell us a bit about that?
Yeah, absolutely. And I look forward to getting our affiliate program back up, so that, because you're the people who watch your show are the kind of people we really want to serve. So I hope to have that going next time we connect. But yeah, silverchartist.com. It's a really unique community. It's an over-the-shoulder service. I show with members exactly what I'm doing, and hopefully that helps them to make better trading and investing decisions. And it's a great community as well.
Fantastic. And before I let you go, I don't want to put you on the spot here, but I noticed you had the election noted on one of your charts there. Do you anticipate any volatility, or what are your expectations going into these final days and after the election?
Yeah, I think it's just too hard to predict. There's too many variables to have, I think, an accurate forecasting model of how the election is going to affect the metals. But what I do find interesting, and maybe I could pull up that chart, what I find interesting is that when a technical pattern is set to resolve around a key event, that's worthy of note. So there was this bearish rising wedge in gold that is set to resolve just right around the election time, a little bit before the election, or excuse me, a little bit after the election. So I think that's interesting. It's a somewhat bearish pattern in gold, not long-term bearish, but short-term. So that could indicate some weakness around the election, but I'm not willing to stick my neck out and say, hey, I think we're going lower after the election, but just interesting to know.
All right. Well, Steve, it'll definitely be interesting to have you back on after the election, see where we are. But we really appreciate your time as always. Thank you so much, and God bless.
All right. Thanks, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 28th through November 4th, 2024, while supplies last. This week we feature gold half-ounce backdated Canadian maples at just $110 over melt. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.